Hello guys and welcome to another market review. We're going to kick off by looking at the Euro USD, and as I've been mentioning, the Euro has been stuck in this range and we are only playing ping pong from one side to the other until we see a breakout on either direction. So when price was trading at these lows, we were expecting the market to reverse at least into the mid-range, right? More specifically, last week, I'm going to bring up the weekly and monthly open levels. Price started the week around this area, and we were anticipating that the euro was not going to even trade into the monthly open, that these lows here were going to be front run, and this level here was probably going to hold the market. So, price opened with a gap and traded below the weekly open, and this here and here were the low of the week. So this level here held pretty well. When we look at the H4 time frame, we see that not a single candle closed below the weekly open. So that's a very strong confirmation that the weekly momentum is on our side. So that being said, the last week's plan worked out perfectly because our level held and we made the low of the week on Monday as we expected, and we traded into our target, which was the mid-range of this whole range. Now, because we are sitting at the mid-range, it's hard to be either bullish or bearish. So this is a call for caution, right? So this is why I was saying that, my conviction for this week, it's not that high. I still remain bullish biased on the euro within this range because we have um, a gap still to fill here, and we have very strong selling happening here. So I just figured out that this area is some it's an area where the market will want to go, and before we end this current year 2025, I think there's a very good chance that the euro trades into this gap one more time. So for next week, I'm actually thinking of just staying out of this market because I don't have any strong play. Okay, because we have volatility, anything could happen, and as I've mentioned, I don't think the monthly candle is going to change direction. So if price by any reason came into this monthly open, I would just blindly buy it with a limit order because in my opinion, it's going to hold, especially if the market comes down very in a very inefficient way, right? Very sharp move with any retracements, without any retracements. The same way I talk about longing around, this whole area, especially if price barely retraces while doing so. I think that it's worth fading the euro if it came into this open gap, just like it happened here, in a very sharp way and inefficient way. But for now, prices is sitting at the mid of the range. So because we had this strong impulse and we are pulling back from the mid-range. I think that the first part of the week is going to go something like this, right? Where we, maybe go higher a bit, maybe we trade into this level, but we're gonna pull back at some point, and because this was the origin of a move, it's probably going to trade into this level, and then I don't know if the market is going to hold this level, bounce, offer one more pullback, and then reclaim the level, and then we keep trading higher. I don't know, right? Because once price comes into this area, if it does, it could also just keep bleeding lower, right? And then we have this scenario where we look for longs, right? So I'm actually just letting the market come into either one of these two areas, right? With match range levels. So those are the two plays I'm waiting for. But I would also pay attention to the way the market trades into those levels, because it's not the same if prices comes here, like this very slowly, that if just goes like this. This is much higher probability of reversal than than any um, slow bleed. So that being said, I don't think there's much to add to the euro. I think it's a week to maybe take the foot off the gas and just let the market show us what the real intentions are. So, my preferred play would just be to see something like this. Then, you see the market trade above this level again, these highs again. Then, because we'll have a weekly open around this area, then you see a sharp pullback that shakes people off, and then you recover this level again and the weekly open, then you probably are set for upside, right? But we'll have to see. I'm thinking that this is a week that's not worth trading, looking at where the euro is. I wanted to cover GBP real quick because we were bullish for the same reasons that we were bullish on the euro. However, it disappointed because, when we look at the H4 on the GBP, this was last week. It was a range. It didn't go anywhere. It took out these lows, and that's all it did, right? Meanwhile, the euro did this. This went up 110 pips. So it was very frustrating to try and long GBP. However, GBP still looks good, and it hasn't given me any reason to not remain long biased. Because, when we look at it, it's just sitting at the lows of this range, and it hasn't broken down. Moreover, when you look at the daily chart, these daily closes are really, really bullish, in my opinion. We haven't had a single daily close below the monthly open since we reclaimed it, right? And there's a lot of buyers at these levels, and this Friday close, it signals, in the way I read price action, that momentum is picking up, for the long side. But that being said, it's very hard to long GBP because every week the data that's published about the currency and the economy is worse than what the market expects, right? So that makes GBP trade like shit. So, and while you have the euro going up and the Australian dollar, you have GBP stuck in a range. So why would you try and long this when you can just trade euro? So there's a little bit of a conflict here, right? However, I still think this should resolve to the upside and trade into this level. But, because it's trading like shit, I'm still being skeptical about this, and I'm just gonna stay away and just, let the market show its hand and stay with higher conviction plays like the euro for now. And I wanted to cover gold, right? Because last week I mentioned, price was here. Price was here at these lows exactly. And I was very bullish because I was seeing that the market was attempting to break out, was going to break out, right? After failing to do so at a key level since it broke down from these all-time highs. And I was seeing this accumulation, and it was very obvious, and there was a very clean invalidation if the market breached, these lows. So, all you had to do was just wait for the new week to start and just get long, right? Because as soon as the market opened on Sunday, it just went higher and rejected from this old weekly open. And, then the market retraced the whole thing between Thursday and Friday. And now I don't have anything of value for gold. This, there's a week where I think I'm gonna have to just wait to see what the market offers because, I also wasn't seeing anything on gold when it was during this area, and I only gained interest once, price was like this, consolidating and, accumulating in this triangle pattern that, is showing me that the market wants to break out. So that's a high probability trade. And now I just find myself in the same position as I was in this whole zone here, where I don't have any clue on what the market is going to do, right? So I just wanted to cover how, this whole setup went, and, the fact that I don't have plans for next week. And I also wanted to cover the Australian dollar because I think the longs can work on this one, right? Because recently, we had this whole range, and when price retraced this whole breakout, I mentioned that it was very, very important to see what the market did once it traded into this range. Because in the event that it trades inside and stays there, it's very likely that it's going to break down and just bleed lower. However, the market closed inside, okay, but it just spent like 3 days inside, and then it broke out of the range again. And then, on the H4, it's pretty clean. You see how it was still resistance. This area was still support, and once price broke out of this range, all the retest held. And again, you see the importance of waiting for H4 closes because you can't get shaken out on the H1, right? I think because yeah, the H1 close inside of the range here, and you maybe thought that this was bearish, but the next candle just led into the monthly open. So this is why you want to only use the H1 and lower timeframes for entries, but don't let the H1 take you out of trades when we are talking about weekly biases and direction for the whole week. So that being said, the fact that we are rejecting from this range and we broke out of this range, so the validation is very clear. If you see an H4 close inside of this range again, you just get out, because then you're probably just going to trade into these lows. So I think it's very obvious that the monthly open is acting as resistance, and we also deviated from there. However, just given the context and the importance of this range, because we are rejecting from it, and I think the direction is to the upside. So one very easy play would be to wait for an H4 close above the monthly open. That signals the true momentum of the next week, and you buy any pullbacks that you get, because I think this is going to get targeted the on the remainder of the month. So this is the month of November, and I think we have plenty of time to trade into this area, right? It's nothing, and I actually think it's going to breach this level and just go a bit higher into this level, right? And all that bias and forecast of where price is going to go comes from the interpretation of the price action around this range, because it's very significant when you study how price behaves in these ranges that led into breakouts. And I already covered that on the Euro AUD, but I'm gonna do it again, right? We have a range, price breaks out, and when it comes into the range, you want to see it like Aussie did. You want to see it trade above and start rejecting from it. Not give us any H4 closes inside of the range. That's what we're seeing right here. But Euro AUD did not do that. Instead, it broke below once it found acceptance, and this was the result. So it's very apparent that the market doesn't want to trade inside of this range. So it's very unlikely that if we are bullish, price is gonna trade into the extreme of this range again, right? Instead, we should be pushing higher, and this would be my first target, and around here would be my second target. I will be fully out around here. So I think maybe AUD is the best long next week rather than the Euro, based on where both are, because the Euro is up into resistance, and I think it can chop a lot more in this area. But the AUD is just in a very, very tight range, below the monthly open and above the range that led into a breakout. And because we are trading above the range, I think that this compression should resolve to the upside, and we should, target the October monthly open pretty easily. Maybe then we retrace a bit, but we should keep trending for the remainder of the week. And lastly, I wanted to cover Bitcoin. Let me see if I have a clean chart. So yeah, like this. So Bitcoin has been falling for quite a while. And Bitcoin has a tendency of pulling back around between 20 to 30%. So just based on those measures, you don't want to look for shorts once price has pulled back that much, right? Currently, we are sitting at a place where, doesn't pay to get short around this area. Moreover, how much deeper could it pull back? Maybe around here. It could happen. I mean, so I think it's gonna offer a significant bounce, just based on statistics alone. I wanted to add something more to that. Price is sitting at the yearly open, and it's very weird that we're going to change the direction of the yearly candle, just when the year is going to end. That doesn't happen very often, if it happens at all. Also, this area was a pivot level because it was support all along, then it was resistance, and then it was support again. So I do think that next week, maybe, or next 2 weeks, we're going to see price maybe give another pull, maybe another drop from this level. But on a reclaim of the yearly open, you want to get long because the market's pulled back enough, around 25% from the all-time high, and it simply doesn't pay to get short around this area. So maybe a lot of shorts could be trapped into this thin move, and a reclaim of the yearly open would be a good trigger to get long, at least into, I would say, 105. This is a very nice move. What happens next, I don't know. If we are going to resume and make a new all-time high, I don't know. But I think a bounce long here, small bounce, is worth playing. And that's all for this week. I hope that next week we will have more clarity. However, we are also coming into the year end, and we need to get ready for the big plays on next year. So come January, we will probably be paying a lot of attention to what the markets are doing, and if there's any big potential move uh, about to happen. Um, See you guys next week.